We think the underlying inflation pressure in Europe is still subdued. You are seeing a lot of noise in the inflation data. As was said earlier, inflation jumped up in January, but we think mainly on technical factors related to an unwind of tax cuts, to changes in the weights and so on. So it is going to be a bumpy path ahead for inflation, but we think the underlying inflation trend is still subdued because there's a lot of slack in the euro area. And so looking ahead, we only think that core inflation will firm gradually here on a sustainable basis and remain below the ECB's aim for quite some time.
Your peer at Morgan Stanley, Chetan Ayers, writing yesterday in the Financial Times, just talking about what could lead potentially to an overshoot as well. And I guess his point really there is it's really hard to argue that there's a couple of $1 trillion just either in people's bank accounts or waiting to get into their bank accounts in the United States. And that's going to provide a hell of a stimulus, which is hard to quantify its effects on inflation.
Well, it's true that we do expect growth to pick up very strongly from here, but it's also true that the level of activity in the euro area is quite depressed. So our estimate is that the output gap, or the amount of slack you have in the euro area, is about 7%. And so you can grow quite a lot, in our view, in closing that output gap before you generate sustained inflation pressures. And so we do think that as the reopening happens when we go into the summer, that growth will rebound strongly across the euro area. But we also think it's going to take time for that pent-up demand to unwind and for the euro area to go back to potential. And that's ultimately what drives inflation in our view.
There's been a lot of debate about the reliability of some of the core inflation gauges. And over the years, as we are watching inflation very stubborn getting back to target for the last 10 years or so, there was a big debate raging as to whether house prices should be included when you're targeting inflation. What happens next? Because there is a view that some of these real assets could start to rise much more swiftly as we get a recovery taking place. How do we put that into our thinking as we think about inflation now for the next 10 years?
Yeah, it's an important issue, and of course, an area where the euro area looks quite different from other countries in putting much less weight on housing costs than, for example, the United States. So we do think there is going to be a push in the direction of including and measuring housing more appropriately in the euro area. But we also think this is going to take quite some time. And this is, of course, featuring quite prominently in the ECB review. There are discussions how to measure housing, to what extent to include it. And we do think we will move in that direction, but also think it's going to be a pretty slow process. In terms of the implications for inflation, what it will probably do is push it up slightly. As you said, house prices tend to rise more quickly, or have done, than inflation more broadly. But we also think it's not going to be a huge effect. So on average, probably a couple of tenths. And so even with that inclusion, inflation is still running at pretty subdued levels, we think, in Europe.